Hello students, welcome to Stress for CA and CMA. Myself DV Subramanyam, and in this lecture we are going to have a detailed discussion on paper number 2 corporate and other laws RTP for May 2023 attempt. Let's begin our discussion with case scenario or multiple choice questions. Modern Limited is a company limited by shares that manufactures furniture items apart from material used in modular kitchens. Modern Limited is an unlisted company with a registered office in Mumbai, Maharashtra. It has a corporate office in Delhi and branch office throughout the country. So first of all, a registered office, corporate office, are they one and the same? No, ma. Are they one and the same? No. Registered office is the address, company register it with a ROC. Every company upon incorporation within 30 days. Within 30 days of incorporation, every company must and should have a registered office. And the details of registered office should be registered with a ROC. And it is the place where all the legal documents, documents used for incorporation of the company, charge related documents, deposit related documents, simply, all legal documents are preserved over a period of time. But coming to the corporate office, it is a place where all executives will work. Important decisions will be taken at a corporate office. So majority of the cases, company will have registered office and corporate office at one place. But some companies, they may have a registered office at one place, corporate office at another place. It's up to them. So there is no limit on them, to have a registered office and corporate office. There is no such provision. Are you all getting my point, students? And moreover, my dear students, company must and should register its registered office address with ROC. But coming to the corporate office or branch office, no such requirement is there under provisions of Companies Act. Following are the facts regarding the 18th annual general meeting of the Modern Limited. The Modern Limited is a lead sponsor of furniture trade event India Furniture Expo 2022 and a member of the Association of Furniture Manufacturers and Traders. Modern Limited, on behalf of the association, booked the Expo Hall in Mumbai for the event and also decided to convene its 18th annual general meeting at the same hall after the conclusion of Expo 2022. So, where they want to conduct annual general meeting, in Mumbai, right? In Mumbai, they are planning to conduct AGM. Here, you should remember the rules for conducting AGM with respect to three items: day, time, place. Day, time, place of annual general meeting. Coming to the day of general meeting, AGM can be conducted on any day except a national holiday. You all know national holiday. In India, we are having three national holidays: Republic Day, Independence Day, Gandhi Jayanti. So you can conduct general meeting on any day except national holiday. And next one, coming to the time. The meeting commencement time should be during business hours. That means it should be commenced between 9 a.m. and 6 p.m. However, it can be continued even after 6 p.m. also, but the commencement time of the meeting should be between 9 a.m. and 6 p.m. And coming to the place of annual general meeting, here you are having two options. You can have AGM at registered office premises, or you can have a AGM at any place in the city, town, village where registered office is situated. Logic is very simple. Only the members of the local residents, members of that city residents will incorporate a company for themselves. Yes or no? See, I'm a resident of Andhra Pradesh. I'm a resident of particularly, Guntur, Andhra Pradesh. Now, I'll incorporate company in Guntur, Andhra Pradesh. Suppose if I want to start a company in Hyderabad, what I'll do? I'll move to Hyderabad and I'll start a company in Hyderabad. That is the logic, AGM should be conducted at any place in the city, town, village where register office is situated, so that, it is accessible to all the members of the company. Listed companies, it is different. In listed company, shareholders, you will find, and throughout the country. You'll find shareholders, throughout the country. But I'm speaking about generally, company. Generally, the majority of the companies are not listed companies. Only few companies. Few companies are listed companies, but majority, more than 60-70% of the companies are unlisted companies only. Okay, fine. For the event and decided to convene its 18th AGM at the same hall after the conclusion of Expo 2022. Okay, fine. But later they found that the India Furniture Expo 2022, which was scheduled to be held on September 16 to 19, 2022, had to be postponed as Bombay Municipal Corporation continued to occupy the hall as a vaccination center. Therefore, Modern Limited has to rethink its plan and now convene its 18th AGM on September 27, 2022 at IMA Auditorium in Delhi. The registered office is situated at Mumbai, but they want to conduct a AGM in Delhi. Is it possible, sir? Now you need to refer to exceptions, proviso to section 96. In that proviso, we are having a privilege that, in case of unlisted company, that means other than listed company, they can conduct AGM at any place in India provided all the members of company should give consent for the same. So generally, two options are available, but for coming to the unlisted companies, they are having third option, that is they can have AGM at any place in India, subject to a condition. The condition is all the members should give consent to the same. So all the members, now see here near its corporate office, and all the members consented to the same. Now there is no objection with respect to place of AGM. And moreover, beginning first paragraph, you got this point. Modern Limited is an unlisted company. So every point is important, ma. You need to pay lot of attention. You need to pay lot of attention for understanding these provisions. The notice of the said meeting was posted on September 5th, 2022. They use the word post. Notice can be served through a post or, on electronic form also. You can send notices in online form also. Simply, email, Gmail. You're getting my point. Now, the point is, coming to the rules of notice, it should satisfy a condition that, every notice should be sent at least, the length of the notice, I'm speaking about length of the notice, should be, at least 21 clear days. A minimum 21 clear days notice should be given to the members, so that members can go through the efforts of the company. They can go through the financial statements, they can go through the position of the company, they can go through the important decisions to be taken at the general meeting, and they will come to a conclusion whether to cast vote in favor of the resolution or against to the resolution. So the point is, we need to check here at least 21 clear days notice condition satisfied or not. Let's see, ma. You are having two dates. 5th September is the date of post of notice. Date of post of notice. The next one, 27th September, it is date of AGM. Date of AGM. So just calculate the time limit, ma, including these days. Including these days. So it is approximately 23 days. 23 days. Check it. So 5th September to 27th September. Including these two dates, 23 days. But we are having a condition this month, 21 clear days. So what this clear word indicates? It indicates, while calculating the length of notice, date of post of notice as well as date of meeting shall be excluded. These two dates shall be excluded. So 23 minus 2, it is 21. And we already read the point, the notice is posted. So they used a manual form for sending the notices, post. So we had a rule under section 20, section 20, when you are serving notices in offline mode, simply when you are sending notices via post, 48 hours shall be excluded for putting the same into the transmission. So you need to exclude 48 hours time period. 48 hours is nothing but 2 days. So I'm excluding 2 days, 2 more days. Now the notice is just 19 days. Is it a valid notice or short notice? This is a short notice. Short notice calling for AGM will be valid if 95% of the members, entitled to vote give approval. Entitled to vote at the AGM must give approval to the shorter notice. Then only shorter notice is valid. Let's see calculation one more time. So including these 2 days, it is 23 days. We need to get 21 clear days. For that, you need to exclude date of notice, date of posting the notice and date of AGM. So while excluding these 2 days, it will be 21 days. And since notice is sent through post, you need to exclude 48 hours for putting it into the transmission. So that's what, I excluded 2 more days. Now the valid number of days is 19 clear days. However, section 101 is stating that notice shall be given at least 21 clear days. So the notice is not proper. The notice is not proper. Specifying place, date and day in addition to the business to be transacted. In case of Mr. Ashok, who is a declared insolvent but undischarged, the notice was sent to assignee. So a notice shall be given to all the members of the company. In case any member become insolvent, then only to the official assignee. No need to send notice to the member of who became insolvent. Sending notice to official assignee is sufficient. In case member got deceased, then legal representatives of the deceased member. Yes, should get a notice calling for general meeting. And while a willful omission was made in giving notice in case of Miss Anjum. So here you need to remember, In case of willful omission of giving notice, the proceedings at the general meeting stands void. The general meeting is void and all the decisions taken at the general meeting will be void. But if it is accidental omission, then the proceedings in the general meeting will be valid. Sir, is it accidental or willful omission? How can we know? The burden of proof lies on the company. And in the paragraph, it was very clear the omission was willful. So it is not accidental omission. So therefore, all the decisions taken at the general meeting stands void. Next one. At the meeting, Mr. Singh was elected as the chairman of the meeting by show of hands, while Mr. Manohar registered his dissent on the appointment of Mr. Singh as chairman of the meeting and sought a poll to elect the chairman. So general rule, general rule, unless poll is demanded and unless e-voting is applicable, voting at general meeting shall be conducted through show of hands, where each and every member is entitled to vote, where each and every member is entitled to one vote, irrespective of his holdings in the company. Whether he is holding 10 shares, 1 million shares, it is immaterial. Each person will be given one vote in the general meeting. That is show of hands. But coming to the poll, postal ballot, e-voting, you will be given a number of, you'll be given votes, its number is equal to the number of shares held by you in the company. Simply, proportionate to the paid up share capital. What is your holding? In proportionate to the total paid up share capital of the company, that much voting power you are entitled to. So under show of hands, each and every member will be given one vote. Of course, if any person thinks that, if voting is not in his favor, then he can demand for poll. Even voting is conducted under show of hands, immediately a person can demand for a poll. But the point is, the persons who are demanding for poll, they should have at least 1/10 of the paid up share capital, and they should be entitled to vote at that general meeting. If these conditions are satisfied, then they can demand for a poll. And once poll is demanded, it should be conducted immediately with respect to two matters. One is adjournment of AGM and the other one is appointment of the chairperson. So matters related to the adjournment of general meeting and appointment of the chairperson, if poll is demanded, it should be conducted immediately. But with respect to other matters, the poll can be conducted within 48 hours from the time the demand was made. Now here, poll was demanded to elect the chairperson, so it should be conducted immediately. Mr. Manohar has substantial voting right of a company being part of promoter group. A poll was held to elect the chairman of the meeting and Mr. Singh voted twice in his capacity as a member as well as a chairman. See, twice in the capacity of a member. As a member, he is entitled to vote. As a chairperson, he will be given additional vote and this vote is known as casting vote. But the point is, casting vote will be given only in case of equality of votes. That means, in case of votes in favor equal to votes against, and the proposed resolution is ordinary resolution. If these two conditions are satisfied, then casting vote will be given. What are those cases, ma? One is, we need ordinary resolution. Ordinary resolution means votes in favor greater than votes against. In that situation, votes in favor equal to votes against, that situation arises, sir. To avoid this situation, chairperson will be given a casting vote and it depends upon AOA also. So when you read section 104, you'll get a clarity. Section 104, chairperson. Just go through it, you'll get a clarity. Understood, ma? Everyone. So here, Mr. Singh is just entitled to only one vote, ma. But however, he casted a vote twice. One is in a member capacity, the other one is in chairman capacity. The second vote is invalid. While the poll was taking place, Mr. Singh was elected chairman through the poll as well by overwhelming majority. Super. Ms. Vanika, who is not a member of the company, attended the meeting as Mr. Alok's proxy voted both times. When Mr. Singh was elected by show of hands and when he was elected by poll. Sima, proxy is having two disabilities. One is proxy is not entitled to speak at general meeting. The next one, proxy is not entitled to vote under show of hands. Proxy may demand for poll. Proxy can cast vote under poll, but proxy is not entitled to speak and proxy is not entitled to vote under show of hands. Are you getting my point? So Vanika vote under poll is valid. Vanika vote under show of hands is invalid. When she initially voted, she raised her hand in favor of electing Mr. Singh as chairman of the meeting, while during the election through a poll, she cast a vote against. Okay, so vote in favor will be eliminated. Of course, under show of hands, her vote is invalid. And under poll, she casted vote against, it is a valid vote. Mr. Manohar raises the question on a vote that is casted by Mr. Singh in his capacity as chairman. Hence, he passed the remarks on him and his alloys, which can be considered defamatory in nature. Yes, exactly. If our enemy is getting something, good news, or if enemy is going to celebrate something, definitely we will scold him. We are ready to do that. I agree. Fine. So here, the same person, Mr. Manohar, he made some remarks which are defamatory in nature. Chairman, at his opinion, instructed the company secretary to exclude the remarks passed by Mr. Manohar while preparing the minutes. But some members raised a voice against the discretion of Mr. Singh because they find remarks didn't carry any matter which can be considered defamatory, while some other members feel remarks are made with intent to defame chairman. I'm telling you, my dear students, chairman is having a absolute discretionary power to eliminate or to exclude certain matters from the minutes if such matters are defamatory in nature with respect to any person, or if it is not relevant to the subject matter, or it is detrimental in the interest of the company. Such matters, chairman is having absolute discretionary powers to exclude. So he don't think that if members request chairman or if members demand chairman, then only chairman will act. No, no, no. Chairman is having absolute discretionary powers to exclude certain matters which are defamatory in nature or not relevant with the subject, or detrimental in the interest of the company from the minutes. So, okay, with this, we completed discussion with respect to case scenario. Let's see multiple choice questions. Regarding the notice of the meeting given by Modern Limited, you are required to pick the correct option in light of provisions of the Companies Act 2013 and rules notified thereunder. First one, Modern Limited observed the length of the notice as required. No, wrong answer. 21 days notice is required. 21 clear days notice is required. But they give only 19 clear days notice. So this is not correct. Notice shall be given to the member irrespective his solvent, adjudged or declared insolvent or discharged insolvent. Modern Limited committed default. No ma. In case of insolvent person, notice shall be sent to the official assignee. So Modern Limited didn't commit any default. Notice shall be given to the assignee of the insolvent member. Modern Limited correctly did so. Correct. Willful omission in giving notice will invalidate the proceedings of the meeting in case of Modern Limited. This is also correct. Check the options, where 3 and 4 is correct. So option B is the correct answer. Option B is the correct answer. Option 3 and 4. Are you getting my point, students? Next one. Regarding the place of 18th AGM of Modern Limited, decide whether applicable provisions are violated or not in light of provisions of Companies Act 2013 and rules made thereunder. Let's see. Violation because Modern Limited shall convene and conduct AGM only at its registered office. No, this is not a correct option. Why? Because it's an unlisted company. They can conduct AGM at any place in India provided all the members give positive consent. The wrong option. Violation because AGM shall be held either at the register office of the company or at some other place within the city, town, village in which register office of the company is suitable. So there is no violation, ma. You need to study third option also, right? Third option, at any place in India if members give consent. No violation because AGM shall be held either at registered office or corporate office. No, 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 no. Corporate office option is not given under section 96. This is also wrong option. And no violation because AGM of the said company, which company? Unlisted company, may be held at any place in India. So D is the correct answer. Next, regarding vote casted by Ms. Vanika, which of the following statements hold truth in light of provisions of Companies Act 2013 and rules notified thereunder? Being proxy, Ms. Vanika is not allowed to cast vote on a poll. No, 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 no. Being a proxy, she is entitled to cast vote on a poll. Wrong option. Being proxy, Ms. Vanika is not allowed to cast vote by show of hands while she can cast vote on a poll. So B is the correct option. Despite being non-member and can be proxy but can't cast vote either by show of hands or on a poll. Wrong option. Ms. Vanika can cast vote in both the cases by show of hands as well as poll. Wrong answer. Wrong option. So simply B is the right option. Fourth question. Regarding the inclusion or exclusion of the remarks by Mr. Manohar, advise the company secretary which of the following statement hold truth in light of provisions of Companies Act 2013 and rules notified thereunder. Mr. Manohar remarks shall be included in minutes because minutes shall contain fair summary of the proceedings. Correct? No, this is a general rule. Minutes shall contain fair summary of the proceedings. This is a general rule. I agree with the statement, but you need to refer to exceptions, right? Under exceptions, we are having a clear cut points, if they are defamatory in nature or detrimental in the interest of the company, or irrelevant to the subject, this can be eliminated subject to the discretionary powers of the chairman. So wrong option. Mr. Manohar's remarks shall be excluded from minutes because remarks are made with intent to defame chairman, and chairman opinion of inclusion and exclusion is immaterial in such case. Immaterial. No, 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 no. Mr. Manohar's remarks shall be excluded from minutes because chairman has absolute discretion to exclude any matter which is defamatory in his opinion. This is the correct option. And Mr. Manohar's remarks shall be included in minutes because many members challenge the chairman's opinion and feel remarks were not defamatory. This is also wrong option. So absolute discretionary power left with chairman of the company. And as is the cardinal rule of construction that words, sentences, and phrases of a statute should be read in the ordinary, natural, grammatical meaning so that they may have effect in their widest amplitude. That is rule of literal construction. So when the statement in a law is having a clear cut words, the words are not vague, the words are unambiguous. So you can understand those words by simply referring to the ordinary or natural or grammatical meanings. Then rule of literal construction you should apply. Harmonious construction is applicable when there is a conflict between two provisions of the same section or of a different sections of a same statute, or different provisions of different statutes. So harmonious construction provide harmony between two of these provisions which are conflicting in nature. And beneficial exceptional construction, if a ordinary natural grammatical meaning of the sentences are giving the interpretation which is objecting the main provisions of the act, which is against to the act, then you should not apply literal construction. In those cases you should apply beneficial or exceptional construction. So when the words are not clear, some vagueness is there, some ambiguity is there, then you need to refer to beneficial. Next, exceptional construction rules. ABC Limited has its shares listed on a recognized stock exchange in India. During current financial year ending on 31st March 2023, the Securities and Exchange Board of India has found some irregularities in the filings made by the company. Accordingly, SEBI proposes to make an application to tribunal for reopening of the books of accounts of the company. You as an expert called upon by SEBI to advise with which last financial year for reopening of the books of accounts an application can be made. Now, every company is required to maintain books of accounts related to the last 8 financial years. Preceding 8 financial years, they need to maintain books of accounts. Of course, if a company is recently incorporated, suppose the age of company is just 1 year, it can't maintain 8 years books of accounts. In that case, the life of the company or 8 years, whichever is less, you should follow. Understood? So now we are in the financial year ending on 31st March 2023. That means financial year 2022-23. Let's go back 8 years. 8 years. So 21, 22, 20, 21, 19, 20, 18, 19. Next one 17, 18, 16, 17, 15, 16, 14, 15. So last 8 years. So 1, 2, 3, 4. I'm sorry. Just wait. So 1, 2, 3, 4, 5, 6, 7, 8. So 2014-15 is the correct option. Understood? So SEBI, Income Tax Department, Central Government, if they had any doubt with respect to irregularities in the company, they can request for reopening of the accounts. They can file a petition or an application with NCLT for reopening of the accounts. In that case, they can go back up to 8 years. Next, seventh question. The amounts accumulated in IEPF shall not be used for, underline the word not, negative statement, shall not be used for. That means, out of following 4 options, 3 options you can use IEPF. Only for one option, IEPF is not permitted. What are those? What are the points? We'll see. Refunds in respect of unclaimed dividends, mature deposits, mature debentures, application money due for refund and interest thereon. Yes, you can use this for IEPF fund. You can use it. Reimbursement of legal expenses incurred in pursuing class action suits under section 37 and 245. Yes, this is also permitted. You can use it out of IEPF. Grants or donations to the central government for the purpose of investor education and training. Sima, just read it carefully. Grants or donation to the central government. See, central government will give grants or donations to IEPF. This is possible, but reverse. IEPF donating money to central government, this is not at all permitted for for the purpose of investor education and training. The IEPF is responsible for investor education and training. Therefore, this C option is incorrect with respect to usage of funds for out of IEPF. And we need to get incorrect option only. Why? Because the question ends with shall not be used for. So C is the relevant option with respect to this question. And distribution of any discharged amount among eligible and identifiable applicants who have suffered loss. Yes, you can utilize IEPF amount for this option also. So out of 4 options, C is the correct option. And 8th question. The options are not clear, ma. Here you need to take assumption and you need to identify the correct option. The options are not clear. Some ambiguity is there. Let's see. Which among the following will not be considered as a foreign instrument? Will not be considered as a foreign instrument. That means, which among the following is an inland instrument? You need to identify an inland instrument. My dear students, what is an inland instrument or what is a foreign instrument? You all know. Foreign instrument is an instrument which is not inland instrument or other than inland instrument. But coming to the inland instrument, so here, 3 conditions to be satisfied. Three conditions are there, ma. 3 conditions are there. Either A and B or A and C conditions should be satisfied. That means A should be satisfied. Out of B and C, one of the condition, even if one of the condition is satisfied, then we call it as inland instrument. First condition is drawn or made in India. Next one, drawn or made on a person, payable by person resident in India. Next one, payable in India. So if A and B are in India, then it is inland instrument. If A and C are in India, then also it is an inland instrument. Are you getting my point, students? Drawn or made in India and made payable by person resident in India, or it should be payable in India. So now let's see. A bill drawn on person residing outside India. I assume that it is drawn outside India. So here, the drawee is non-resident, and I assume that the bill is also drawn outside India. So when bill is drawn outside India and it is drawee is outside India, then it is obviously a foreign instrument. Irrelevant whether it is payable in India or outside India. First of all, this option is not at all clear. Payable in India or outside India. See, the place is not certain. Place of payment is not certain. Next one, a bill drawn on a person resident outside India. So here drawee, once again non-resident, but payable outside India. So this is very clear, both B and C, both out of India. Therefore, this is also a foreign instrument. Next, coming to C option, a bill drawn on a person residing outside India but payable in India. So here also, drawee is a non-resident, and I assume that it is drawn outside India only. We had no other option now. You need to take this assumption. And let's see D option. A bill drawn on a person resident in India. So here, who is the drawee? A resident. And I assume that this is drawn in India only. In India. But payable outside India. Okay, fine. A and B are in India, right? So therefore, it is inland instrument. Option D is the correct option. Option D is the correct answer. Next, who cannot inspect the register of charges? Once again, observe it. Who cannot inspect the register of charges and instrument of charges during business hours without paying any fees? Actually, members and creditors of the company can inspect register of charges and instrument of charges during business hours without paying any fees. Other than members and creditors of the company can't inspect without paying fees, they should pay fees, then only inspection is permitted. So member can inspect, but the question is cannot inspect. Creditor can inspect without payment of fees, and persons other than members and creditors of the company cannot inspect without payment of fees. Without payment of fees. So option C is the correct answer. And coming to the last multiple choice question, as per the provisions of Companies Act 2013 and relevant rules thereunder, an eligible company is not permitted to accept from public or renew the same deposits which is repayable on demand or in less than. So, not permitted. First of all, see the point, not permitted. The minimum tenure, not less than 6 months. And further, the maximum period of acceptance of deposits cannot exceed 36 months. But for the purpose of meeting any short-term requirements, a company may accept or renew deposits for a repayment earlier than 6 months, but it should not be less than 3 months. But it should not be less than 3 months. There is a limitation with respect to 3 months deposits. It can't accept more than 10% of the paid-up share capital reserves and surplus. Did you remember the point, ma? Reserves and securities premium. Okay, fine. So now identify the correct option. There is, option A is the correct option. 6. Fine. For this multiple choice questions, we completed. Now, division B, descriptive questions. So I'm going to read the question and I'm going to show you relevant provision in stressed material and I'll give you proper conclusion also. Harsha Limited is an unlisted public company having 5 directors. So it's a public company having 5 directors in its board, which includes 2 independent directors. Fine. And Sankalp Private Limited is a subsidiary company of Harsha Limited. So here we are having 2 companies, H Limited and S Private Limited. S Private Limited is a subsidiary to H Limited. Now, a private company, if it is a subsidiary to a company which is not a private company, simply a private company which is subsidiary to public company is deemed to be a public company. So, deemed public company. To this company, all the provisions that are applicable to public company shall apply. You're getting my point? Actively carrying on its business, having paid up capital of 1.5 crore with 40 members and turnover of 18 crores respectively, and the said company is not a startup company. Okay, fine. In the context of aforesaid case scenario, please answer the following questions. Whether Sankalp Limited is mandatorily required to prepare cash flow statement for the financial year as a part of its financial statements. We'll see the option, we'll see the provision first. So page number 30, question number 4. So just see the provision ma. Financial statement includes balance sheet, profit and loss account, cash flow statement, statement of changes in equity if applicable, and any explanatory statement annexed to are forming part of the financial statements. However, financial statements with respect to OPC, small company and a dormant company and private company, if it is a startup, may not include the cash flow statement. May not include the cash flow statement. So if it is a OPC or small company or dormant company or private company being a startup, in that case, it is not required to prepare cash flow statements while preparing financial statements. Are you getting my point, students? Now come back to the question. I hope everyone understood the provision with respect to OPC, small company, dormant company and private company being a startup. It is permitted from not providing cash flow statement in financial statements. Now clearly observe each and every situation. Is Sankalp Private Limited coming under the category of OPC? The answer is no. Why? Because it is having a 40 members. And moreover, in case of one-person company, the name shall always ends with OPC Private Limited. The name should contain a word OPC Private Limited. Here the name of the company is Sankalp Private Limited. Moreover, the company is having 40 members. Now tell me how it comes under OPC. So it is not a one-person company. Small companies are, the turnover is 18 crores only, sir, less than 20 crores, in that case, for that year. As of now, amendment is there, a turnover can be up to 40 crores. But before amendment, turnover limit is 20 crores. Paid up capital limit is 2 crores. Sir, within the limits only, sir. and it is a private company, sir. So this will come under small company. No, 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 no. Private, small company excludes a public company, holding company, subsidiary company, statutory companies, Section 8 companies. And this is a subsidiary company. And moreover, this is a subsidiary to public company. This is a deemed public company. Small company definition starts like this: any company other than public company. So therefore, Shankul Private Limited is not a small company. Sir, dormant company, sir. Seema, last year the turnover is 18 crores. The company is actively doing business. How can you call a company inactive company? This is doing business, right? So you can get a dormant status only, last two financial years if there is no significant accounting transaction. If there is no significant transaction in the prescribed time period, when you go back, during the prescribed time period, if there is no significant accounting transaction, you may get dormant status. But last year company is having 18 crores turnover. And how can you call this company as a dormant company? Are you all getting my point, students? Everyone. Next one, private company being a startup is also permitted, um, from is also exempted from preparing cash flow statements. But here the question is very clear. The said company is not a startup company. The said company is not a startup company. So this option is also not permitted. So it is not a OPC, not a small company, not a dormant company, and it won't come under startup company. Therefore, compulsory, the company is required to prepare cash flow statements. So here you can see you can see the conclusion. I'm not going to read you entire answer, but you can see the conclusion. It is mandatorily required to prepare cash flow statement for the financial year as a part of its financial statements, as it does not fall in any of the categories of the companies mentioned under provision to section 2 plus 10 of the Companies Act 2013. Are you getting my point? First of all, this is not a private company. Why? When a company is a subsidiary to a public company, it automatically becomes a public company only. Understood? So in all these situations, the company is required to prepare cash flow statement. Of course, it is not a WPC, not a small company, not a dormant company, and not a private company being a startup. So 11th question we completed. Next, 12th question. Aman, an engineer, has started a new company with the name of Nuts and Bolts Private Limited. He got registered a company with the same name. However, Nuts and Bolts is a registered trademark. After 5 years, when the owner of the trademark came to know about the same, when after 5 years, fantastic. 5 years he slept. Okay. It filed an application with relevant authority. Can the company be compelled to change its name by the owner of trademark? Can the owner of registered trademark request the company and then company change its name at its discretion? Let's see the provision in our material. So here you can see page number 32, question number 15.5, fifth point. Sima, rectification of name, section 16. The provision applicable here is section 16. First of all, the name of the proposed company, the proposed name of the company, or the proposed change of the company in case of existing company. The name shall not be similar or identical to the name of existing company, and it should not be similar or identical to the name of existing registered trademark. You're getting my point? If in case infringement of trademark happened, unauthorized use of trademark happened, the owner of registered trademark should file a complaint with central government within 3 years of incorporation of the company. The condition: within 3 years of incorporation or registration of the company, you should file an application with central government, and in the opinion of central government, yes, if it is identical with or too nearly resembles to an existing trademark, it may direct the company to change its name, and the company shall change the name or new name as the case may be within a period of 3 months. There is an amendment within the 3 months from the issue of such direction after adopting an ordinary resolution. Now, my dear students, coming back to the question, tell me, owner of the registered trademark, when he filed an application with relevant authority, 5 years, the period of 3 years completed. Now he can't file an application with central government. Therefore, the company is not at all compelled to change its name. It is not required. First of all, no need to change its name. So as per section 13, a company can anytime change its name by passing a special resolution. Why? This won't come under rectification of name. Just see the above paragraph. In the given case, owner of registered trademark is filing objection after 5 years of the registration of company with a wrong name, while it should have been filed with the same within 3 years. Therefore, company can't be compelled to change its name. Of course, company voluntarily, by complying the provisions of section 13, that means simply by passing a special resolution, they can change the name. So owner of the registered trademark can request the company. For request, no need of right ma, because it's everyone inherent right to request, to beg. So no express right is required in this case, and the company accepts the same, then it can change its name voluntarily by following the provisions of section 13. Simple question ma, from incorporation of companies chapter. Coming to the next 13th question. Allo Limited received a communication from central government for preparation of periodical financial results and complete audit or limited review of such periodical financial statements. So this is a company, public company, and no more data was provided with respect to listing. So I assume that it's an unlisted company. The board of directors have raised an objection on the ground that as it is an unlisted company, okay, fine, unlisted company, periodical financial results need not be prepared. Examining referring to the provisions of Companies Act 2013 in this regard. This is the latest amendment, section 129A recently inserted. So according to this, if you come under an unlisted company, you are required to prepare periodical financial statements. So we'll see the relevant provision in our material, page number 34, question. So we'll see it. 34. So central government is having a power. It can prescribe, class or class of unlisted companies as the case may be. So every unlisted company is required to prepare periodical financial statement. Is required to prepare financial statements on periodical basis. Say for suppose quarterly, half yearly, monthly. Why? Because when a company is preparing financial statements, annum basis, 12 months. Suppose we are in the month of December. If you want to know the results of the company, you had no other option. You need to refer to 31st March financial statements. But for the time being, already 9 months completed. During these 9 months, what is the result of the profits or losses of the company? What is the position of the company? So a stakeholder will definitely think about these points before making investment. Before making investment in the company, definitely he will think about this point. So of course, company is required to prepare financial statements on per annum basis. So this kind of the question or the objective of prospective investors is not getting fulfilled. Simply prospective investors can't take a correct decision based on outdated information which was related to 31st March. Right now I'm in the month of March. Actually, I'm in the month of March. So today the date is March 22nd. So I need to wait 8 more days to know the results of the company. But if I am in the month of December or November or September, so right now what is the position of the company? What is the result? Profit or loss? For getting this information, you had no other option except a company preparing a periodical financial statement. Sorry, simply if a company prepare financial statements on periodical basis, then the solution to this question will be given. So limited review or audit of periodical review, audit of periodical financial statements. So limited or complete audit. To obtain approval of the board of the directors and complete audit or limited review of such periodical financial results in such manner as may be prescribed, and file a copy with the registrar within a period of 30 days of completion of relevant period with such fees as may be prescribed. The unlisted company is required to prepare financial statements on periodical basis. Therefore, the directors of LO Limited contention is invalid. Understood? It's a theory question, but you need to give conclusion. Next question number 14. Car Nidhi Limited was about to hold an AGM on 25th August 2022, for which the notice of AGM along with relevant documents as prescribed was sent to all its members, including the following. So first of all, it's a Nidhi company and it is sending copies of financial statements, relevant documents along with the notice of AGM. So relevant documents, simply financial statements, board report, auditor's report. Here section 136 is applicable, and section 136, as per section 136, along with notice you need to send director's report, board of and then financial statements, auditor's report, everything. to each and every member of the company. But for Nidhi company, there is a privilege, there is an exception. The exception is in case members holding 1% of paid up share capital or rupees 1000 face value of securities, whichever is less, to those members, no need to send relevant documents along with notice calling for general meeting. Simply advertise in a newspaper which is having a wide circulation in that area where Nidhi company got incorporated. The privilege is very simple, ma. See, let's see page number 59, question number 26, page number 59, right? Page number 59. So this paragraph is important for writing that answer. So that's what I'm telling you. Don't mug up the provisions. First, try to understand the provision, interpret the provision. Simply, if you remember this one line, okay, of course, this is a 10-line paragraph, but the meaning, if you remember this meaning of the provision, then only you can answer that question. That is not a small question, almost it can be, there is a chance of asking the same question for 6 marks. Understood? Very single provision is also important for scoring the marks. I'm not asking you to mug up the provisions. Try to understand the provisions. So everyone will remember the general rule. Within at least 21 days before the meeting, a company should send relevant documents along with notice calling for general meeting. Everyone will remember the general rule, but there is an exception. You need to remember the exception. Then only you can answer the question. Fine. Let's see. A member individually holding shares with face value of 800, which amounted to 0.16 of total paid up share capital. So this person, no need to send notice along with relevant documents to this person. Advertisement is sufficient. And two members jointly, I'm telling you, this 1% of paid up share capital or rupees 1000 face value of securities, this can be held individually or this can be held jointly. So now jointly holding shares with face value of 1600, which amounted to 0.32% of total paid up share capital. So 1% condition is not fulfilled, but face value of securities, it exceeded 1000. Therefore, to this person's notice along with relevant documents should be given individually. Simply, these persons are entitled to get notice as well as relevant documents. Other persons, publishing in newspaper is sufficient. 42 members, each holding individual shares with face value of 600, which amounted to holding of just 0.12 of total paid up share capital for each such member. Again, not required. Individually they are holding for face value 600. So these persons no need to get notice. And all the remaining members holding individually more than 1.2% of total paid up share capital. All these remaining members should get notice physically, physical copies. In the AGM held on 25th August 2022, the members were not provided with the facility to vote by electronic means. See, e-voting is applicable to a listed company as well as companies having members, 1,000 or more. More than 1,000. In case of listed companies and companies having a members, 1,000 or more members are required to conduct voting under electronic means. Listed company and unlisted companies. In case of unlisted companies having 1,000 or more members, e-voting is mandatory. However, Nidhi company, e-voting is not applicable. For Nidhi companies, e-voting is not applicable. In the context of aforesaid case scenario, please answer whether Upkar Nidhi Limited was required to send notice of AGM along with relevant documents to all its members as aforesaid. No, ma. Only for few members holding either individually or jointly face value of security is 1,000 or 1% of paid up share capital. Only to them you need to send notice. Let's see the answer. Here, Upkar Limited was only required to send such notice of AGM and other relevant documents to members who individually or jointly hold shares of more than rupees 1,000 in face value or more than 1% of total paid up share capital, whichever is less. Accordingly, Upkar Limited would have sent notice and other relevant documents to the only following category of members. One is, two members, 1,600 rupees. All the remaining members holding individually more than 1.2% of the total paid up share capital of the company. For the category of members mentioned in serial number 1 and 3, of the aforesaid table given in case scenario, it would have been sufficient compliance if an intimation for the AGM was sent in newspaper as per the provisions as aforesaid, and there was no need to send notice of AGM along with relevant documents to such category of members personally. And with respect to e-voting, there is no question, so no need to answer that question. Fine, come back. Next one, deposits. Answer the following setting relevant quoting simply relevant provisions of Companies Act 2013. Wire Electricals Limited, having paid a capital of 1 crore, availed a term loan of 10 lakhs from ABC Bank Limited to purchase electrical items. Fine. Mr. Tar, one of the director of the company, is of opinion that it shall be considered as a deposit. In this, is his contention correct? First of all, I personally advise Mr. Tar to attend my classes to see my chapter deposits. Why? Because when you read the definition of a deposit, any amount, whether it is in the form of loan or deposit or any other form, if company accept that amount, if any amount is deposited with the company, it will be treated as deposit. The definition, it's a general definition, but you are having some 18 19 exceptions. Among those exceptions, one of the exception is loans from the banks is not treated as a deposit. Let's see page number 135. Just a second. 135. Loans, any amount received as a loan or a facility from any banking company or from State Bank of India or its subsidiary banks or from a notified banking institution or from any cooperative bank, it is not treated as deposit. So he's just gone through the general definition. Receipt of money by way of deposit or loan or in any other form by the company. So the contention of the director is purely incorrect. Personally suggest him to attend my classes. A government company which is eligible to accept deposits under Section 76 of the Companies Act 2013 cannot accept deposits from public exceeding 25% of aggregate of its paid up capital, free reserves, and securities premium account. Is this correct? No, ma. No. Actually, eligible company can accept deposits up to 10% from the members, 25% from the public. But coming to the government company, there is no such bifurcation. It can accept 35% from members, 35% from the public, or 5% from members, 30% from public. So there is no bifurcation as to the 10 and 25. So therefore, the contention of the director is incorrect. Let's see the provision in our material, page number 149. Page number 149. Maximum amount of deposits in case of government companies. Such government companies permitted to accept or renew any deposit together with the amount of other outstanding deposits as on date of acceptance or renewal, maximum up to 35% of aggregate paid up share capital, free reserves, and securities premium account. Next. So both the cases, the contention of the directors is incorrect. Next we see 16th one, last question of corporate loss. Red Limited, the company was incorporated on 1st April 2020. So the first financial year is 2020-21. Yes, provided. The balances extracted from its audited financial statements are given as below. Financial year 2021, the net profit before tax 5 crores, after tax 3.75 crores. 21-22, 7 crores before tax, 5.25 crore after tax. The company proposes to allocate minimum required amount for CSR activities to be undertaken during financial year 2022-23. So this is all about CSR, ma. So CSR for calculating corporate social responsibility limits, the limits, net worth, turnover, and next the next one is net profit. One is 500 crores or more, turnover 1000 crores or more, net profit 5 crores or more. So we are not having other limits, we are having net profit. So you need to look into the net profit. But for the purpose of CSR, after tax logic is not correct. So net profit, it speaks about net profit before tax only. So 5 crores or more, 5 crores or more, 2 years, the condition of 5 crores or more satisfied. Therefore, CSR is applicable. And how much amount, it is required to spend on CSR activities? 2% of last 3 years average profits. Coming to the last 3 years concept, the company is just 2 years old, ma. There is no financial year 1920 as company got incorporated on 1st April 2020. Therefore, So you need to take only 2 years. So now 5 plus 7 average divided by 2. So it will be 6 crores, 6 into 2%. 6 crores into 2%. How much it would be? Just calculate it. 6 into 2%. So 12 lakhs. The minimum amount to be allocated, if so required, taking into the account the relevant provisions of Companies Act 2013, 12 lakhs it should spend on CSR. And you all know CSR expenditure is not allowed as a deduction. This point you'll get to know under Income Tax Act. Just see the calculation. Minimum contribution towards CSR will be 2% of 6 crores. So 12 lakhs. Understood. It is required to have a CSR committee for financial year 22-23. As financial year, the profits before tax for financial year exceeds 5 crores. Understood. Next one. Yes, for from financial year 21-22. That means, from second year onwards, it should have a CSR committee and it should spend amount on CSR expenses. Coming to the other laws. So for financial year 22-23, it's mandatory. Other laws. Mr. Salil purchased furniture of worth 1 lakh from Mr. Puran on credit. Mr. Raman entered into contract with Puran for the guarantee of the payment by Mr. Salil. Okay, fine. So Salil bought some goods from Puran amounting 1 lakh rupees and the same was guaranteed by Raman. So Raman gave guarantee for 1 lakh. On due date, Mr. Salil couldn't make the payment due to his financial crisis. Mr. Puran filed the suit against Raman for payment. Meanwhile, father of Salil paid 20,000 rupees to Mr. Puran on behalf of his son. Okay. Now that means already from the date of 1,20,000 was paid. Now tell me for how much amount Salil is liable to Puran? Just answer my question. For how much amount Salil is liable to Puran? Sir, 80,000. Why? Already paid 20,000. Now coming to the Raman's liability, surety liability. The liability of surety is coextensive with that of principal debtor. Coextensive. You need to use this technical word coextensive. Coextensive means what? To what extent Salil is liable for the same amount Mr. Raman is liable? To what extent Salil is liable for the same extent Mr. Raman is liable? Now, in this case, the Raman's liability is also 80,000 rupees. Why? Already Salil paid 20,000. So Salil liability is 80. So Raman liability is also 80,000. Okay. Mr. Raman, ignorance of the above payment, paid 1 lakh to Mr. Puran as surety. The ignorance of the fact, mistake, payment made under mistake, you can take back the funds. You can get back the funds, if payment is made under mistake. Afterwards, when Mr. Raman knew the facts, he asked Puran for refund of 20,000. Mr. Puran, creditor, denied the refund with the words that's only Mr. Salil who can claim the amount of 20,000. So he's making a statement that only Salil can claim 20,000 and it's not you. It's incorrect, ma. That is purely incorrect. Why? Because Salil liability is restricted to 80,000 and Raman as a surety, he's liable for 80,000 only. I'm asking you a question. Just answer my question. Raman paid 1 lakh to Mr. Creditor, right? Can Raman claim 1 lakh from principal debtor? No. Payment made under mistake, you can't claim that amount from principal debtor. Only a valid amounts, legal amounts which you permitted to the creditor, only those amounts you can get back from principal debtor. Explain with reference to Indian Contract Act 1872 whether Raman can claim refund of 20,000 from creditor Puran. The answer is yes, yes, yes. So let's see the answer, ma. Question number 17. Question number 17. The liability of Mr. Raman is coextensive with that of Mr. Salil, principal debtor, as the father of Salil made payment of 20,000 on Salil's behalf. Mr. Raman is liable only for 80,000. Mr. Puran. Mr. Raman made the full payment without the knowledge of facts. Therefore, he can claim refund of 20,000 from Puran. So the relevant section is 128. That's what you can see in our material also. So page number 10, question number 15. Other laws. So just look at the point, ma. Will the surety liable, sorry, what is the nature of surety's liability? Section 128. You need to write first 2 points. Understood? The relevant provision. Even in Shrestha classes, we continuously, reminding the students, don't mug up the provision, just understand the provision. If you mug up the provision, what happen, in these practical questions, you feel difficult. You feel difficult in answering these kind of questions. Is it clear? So next one, the Negotiable Instruments Act 1881. See on the left margin side, you can see the page number and question number. Even for CSR also, the provision is there in our material. Next one, Negotiable Instruments Act. A bill of exchange is drawn payable to Amir or order. So initially when bill is drawn, it was made payable to Amir or order. Okay, fine. Okay, fine. I'll use the margin here. Okay, fine. Amir or order. Then Amir endorses it to Rani. Rani endorses to Kajal. Kajal endorses to Shark. Shark to Madhuri. And finally, Madhuri to Amir. State with reasons under provisions of Negotiable Instruments Act whether Amir can recover the amount of bill from Rani, Kajal, Shahrukh, Madhuri. The relevant provision in this question is negotiation back. Let's see page number 39 and question number 27. Negotiation back. An instrument is said to be have been negotiated back to him, and he is said to have taken up or taken back the negotiable instrument when a person who has been a party to the negotiable instrument taken it back. So simply, endorser becoming holder endorser becoming holder, it is said to be negotiation back. In that case, all the intermediate parties automatically gets discharged simply to prevent circuitry action. I'll tell you. Suppose what happens if the instrument is dishonored. I'm just asking you, if instrument is dishonored, then Amir will ask a prayer, holder will ask prayer parties, right? Amir asking Madhuri, Madhuri asking Shahrukh, Shahrukh asking Kajal, Kajal asking Rani, and finally Rani will ask Amir only. So there is a circuitry of action. Simply to prevent circuitry of action, all the intermediate parties automatically gets discharged. But there is an exception. In the event of sans recourse endorsement, you can see the point here in question number 27. See, in case of sans recourse endorsement, there could be no circuitry action. So all intermediate parties will be not discharged. They will be held liable automatically. So if it is originally endorsed to Rani by adding the word sans recourse, then all the intermediate parties are liable. They're not discharged. Clear? Next, last but one question. General Clauses Act 1897. M owned a land with 50 tamarind trees. He sold his land and the timber obtained after cutting 50 trees to N. M wants to know whether the sale of timber amounts to tantamount of immobile property. So here one should quote the definition of immobile property. So let's go to page number 90. Page number 90. So the definition of immobile property. Immobile property shall include land, benefits to arise out of the land. Simply, trees, fruits, flowers. Until you separate them from the land, they are the benefits that arise out of the land. So they will also come under the definition of immobile property. Things attached to the earth, simply buildings, or permanently fastened to anything to the earth. The doors, windows, lights, all these are mobile. But once you attach to the building and the building is permanently attached to the land, now all this becomes immobile property. All this becomes immobile property. Are you getting my point, students? So now in the question, the sale of timber, will it come under immobile property or not? The answer is no. Why? Already separated from the land, right? So it lost the significance, it lost the meaning of the definition. Therefore, it is no more an immobile property. It's no more immobile property. Let's see the answer. In the instant case, M sold land along with the timber of 50 tamarind trees of his land. According to the above definition, land is immobile property. However, timber can't be immobile property since the same are not attached to the earth. Last question of RTP before I conclude. Interpretation of statutes. When can the preamble be used as an aid to interpretation of a statute? Right away, theory question. If the provision in a statute, if it is not clear, if it is ambiguity, if there is some ambiguity, to avoid such ambiguity or to avoid such vagueness, to get a clarity, one can refer preamble. And moreover, it is an internal aid for interpretation. So you can refer, you can answer this question. We had the same question in General Clauses Act as well as under interpretation of statutes also. So you can quote relevant answer here. So preamble, I'll show you ma. Just a second. So you can see here, whenever there is ambiguity in understanding any provision of the act, preamble is accepted as an aid to construction of the act. It is moreover internal aid for construction of the provisions. So straight away theory question. Fine. So with this, I conclude a discussion with respect to RTP. And I hope everyone will prepare well for the upcoming exams. Wish you very, very all the best.